And in the
Hello.
back room, we've got Tom Dunkel. He's getting ready to pop on. Tom is passionate about converting tired landlords into passive investors, something that both Matt and I can get behind, as we've had lots of licks being tired landlords. So without further ado, let me bring Tom on. You can take it away, Matt.
Welcome, Tom. Yeah, so right now, Mark is going to work out his audio issue. Mark, can you talk for a second and see if we can hear you?
Tom, can you hear me? Nope.
Okay. All right. Well, Tom, welcome to the show, man. I really appreciate you being on today. Well, let's get started. One of the questions I ask on my show is, you were born and now you're here. Like, what happened in between and what you're focused on now?
Well, be careful what you wish for. I'm 55 now, so I got a lot of history to go through. But in a nutshell, I'm a Philadelphia area native, and big Eagles fan. And so unfortunately their season ended sadly recently. But anyway, grew up in the Philly area. High school, college, moved to DC after college because the economy was a little rough. And so I slept on my buddy's couch while I was looking for a job down there. And then ended up going back to school down there, William and Mary in Williamsburg, Virginia. Lived in DC I was in the aerospace industry doing mergers and acquisitions after business school. And then moved back to the Philly area in 2000 because I still have friends and family in the area. So was doing investment banking for technology companies, which that was the early 2000s. So I don't know if you guys remember what happened, but the internet bubble burst and a bunch of companies like mine went out of business. So had to kind of reinvent. That was my first bubble experience. I've had a few more since then. But jumped into real estate 2006. Determined to build my real estate empire, and then of course we know what happened after that. Ran into the Great Recession. 2009, 10 were pretty rough, but again, kind of reinvented, stuck it out, figured things out, started buying distressed mortgages. And then started looking at other asset classes and ended up in self-storage, which is a great asset class. And I was determined to kind of find an asset class that was a lot more predictable, a lot more resilient in difficult times, since I had lived through a few bubbles at that point. And so we really liked self-storage and what we found there. So went and built a great team. And so now we're up over about 42 million acquired of self-storage. We've got a few more deals in the pipeline. So, we should be approaching, 60-ish million, maybe more before 2024 is out. So that's where we're at.
Wow. Sweet. Has my audio tuned in yet? Can you hear me? Still no.
No, probably not. So I guess what we're going to do is, Mark, maybe, I don't know if you leave the group and then come back in, is it going to shut down the stream?
No, you'll be good.
Okay. Why don't you do that? We'll try it again. I'm going to ask Tom a follow-up question here. So Tom, why real estate? I don't know how, iBanking kind of came into real estate. So what was like the seminal moment, or seminal moments that kind of led up to real estate kind of like igniting that?
Sure. Yeah. Great question. So, I guess, some things skip a generation, but my grandparents were builders and real estate financiers down in Florida in the early 1900s and into the middle 1900s. And, my parents didn't really do anything with real estate, but somehow or another, I just kind of had the bug. And like probably a lot of other folks out there, I read Rich Dad, Poor Dad, and, got educated, started going to some of the real estate meetup groups and that kind of thing. And it just, things just sort of clicked with me. I was determined to kind of do my own thing and build my own thing. And real estate seemed to be just the best environment and asset class to do that.
Very cool. Can you hear me now?
I can.
Oh, wow. Yay.
Hey, buddy. What's going on?
Not much. Thanks for coming on.
Yeah, sure. Thanks for having me. It's great to be with you guys today.
So in follow up to that, and then I'll let Mark take over from here. The self-storage, what kind of led to, to self-storage? Because I mean, a lot of people I'm just going to speak from anecdotally my experience, especially since 2019, um, moved asset classes into self-storage because residential just became untenable for them in terms of the landlord rights or lack thereof to manage collections and all that stuff. So is that kind of how you got your approach into self-storage, or was it completely different than that?
It was similar but different. My partner Joe and I, we, like I mentioned, we had started out buying pools of distressed residential mortgages, and so we had exposure to other asset classes and other businesses within the real estate world. And as we were looking around, we were looking at multifamily, we were looking at hard money lending, looking at different things, but self-storage to us just checked a lot of boxes because it's a very fragmented industry.
Mm-hmm.
Like the big names that you've heard of, Public Storage, Extra Space, CubeSmart, those big guys, they only control about 35% of the self-storage market. A lot of people don't realize that. So the rest of the market is, a lot of them are just onesie, twosie, mom and pop owners. And, they're not going to the conferences. They're not leveraging technology. They're not really keeping up with the drivers of the self-storage business. They don't have a website. They're not marketing. So we just saw a lot of opportunity to go into a predictable asset class and build a nice business. So, and having been a residential landlord, for sure, I could see a lot of the benefits to doing self-storage versus residential, 100%.
No tenants, no toilets.
That's right. In fact, I'll tell you, a lot of our investors, because we're syndicators, we put deals together for our investors. A lot of them are like ex landlords. They're like, they bought into the whole, I want to build a residential real estate portfolio, to get my financial freedom and whatnot. And it just never materialized the way that they were hoping. So now they're selling their property, but when you sell a property, of course, you lose that income. So they're selling the properties and they're rolling those dollars into our self-storage deals, because then they're just, now they're truly, working toward a financially free, passive investor kind of state that we're all striving for.
Yeah. I met with someone that wants to get into the self-storage. She's a new investor. And I had a client that was selling a facility, and it was kind of off market. So I figured I would take them over and show her the facility. We crunched the numbers and went through everything. She said she's trying to buy at $40 a foot, which I don't know if you know this, but it seems really, really low to me. Is that what you're looking for? Like $40 a foot?
Yeah, good question. 40 is pretty low, but it's just like any other real estate markets. It's market to market,
Mm-hmm.
and it depends on what type of real estate too. So like we're getting ready to acquire a boat and RV storage facility at about $40 a foot. But we also have acquired climate controlled, indoor, multi-story self-storage facilities where those have been closer to, maybe $80 or $100 a square foot.
Okay. That makes sense. Yeah. The one I showed her was climate controlled, and she's like, well, yeah, I'll write an offer at $40 a foot. I was like, no, we're not going to insult the seller. He's not even going to look at your offer.
Hey, you never know, but yeah, it's depending on the market, that might be way below. But that's, I think the other cool thing about self-storage is there are still deals out there below replacement cost.
Mm-hmm.
I don't know if the same can be said for multifamily or some other asset classes, but we're able to acquire for less than replacement cost. And what we've been able to do too is take advantage of expansion opportunities where we're able to build for $50 or $60 a square foot, but then when we go to sell the facility, we're going to be able to sell it $90 or $100 a square foot, so we can create that arbitrage.
Yeah. Very good point.
So, Tom, let's talk about what you're seeing out there in the self-storage space in terms of trends. We see in terms of trends and transactions, operationally in the industry. Kind of tell us about that and bring us up to speed.
Sure, yeah. Well, like a lot of other real estate asset classes, transaction volume has fallen off a cliff. It's gotten very low. We were hoping to acquire 8 or 10 facilities last year. We were only able to acquire 3. Part of that is because of our stringent due diligence requirements. As a finance nerd, I'm definitely, what I bring to Belrose Storage Group is a very, very disciplined approach to our acquisitions. So, we say no a lot. We say no probably 50, 60 times for every time we say yes to a deal. But yeah, that all being said, the transaction volume is definitely lower. All the, interest rate hikes and whatnot last year really kind of threw things off. But this year we're already seeing a little pickup in transaction volume. We're seeing that things are a little bit more stable now. I think everyone's kind of come around to realizing that the interest rates are where they're going to be, give or take for a while. At least that's my viewpoint. I don't see them going down a whole heck of a lot. I mean, to me, this is where rates were when I started in real estate. So it's not, we lived kind of in fantasy land there for a while with, super low interest rates. But one thing we have turned our attention to for sure is really beefing up our operational expertise and really leveraging technology. So I don't know if you guys are aware, but there's a company called Life Storage, which was I believe they're the 4th largest self-storage company in the country. They were acquired by Extra Space for $12 billion. And we were able to benefit from that because the vice president of operations for Life Storage, I somehow got in touch with him, connected with him. He's a West Point grad. He's a combat wounded veteran, and he was an entrepreneur, and then he got into the storage business. So somehow or another, we were able to coax him to join our team. And so now we've been leveraging his expertise and his experience from his days at Life Storage to really, kind of bring some extreme operational capabilities to our already great team. We already had a great team, and now he's just, really kind of throwing gas on the fire for us, which has been great. But yeah, we're always looking at ways to leverage the latest technologies and software and systems and all that good stuff.
Are you building your own, or are you finding stuff off the shelf for technology?
Yeah, right now we're mostly buying existing facilities. It's a big bonus if the existing facility has extra land that we can expand onto. So we've done that. We've done that a few times now. We did that down in Lynchburg, Virginia. We acquired a facility that had a bunch of vacant land that came with it. And so we just finished building new on there. So we almost tripled the size of the facility. And again, that was a scenario where we were able to build for less dollars per square foot than we'll be able to sell for later. So we'll have a nice little arbitrage opportunity there. But we do have, we have one ground up deal that we've been working on. And then of course, interest rates were moving against us. So we're kind of slow playing that one right now because, it was penciling out pretty well at, 4 or 5% interest rates, but now, at 7-8% interest rates, it's not as great a deal. So we're kind of reevaluating our options on that one.
Yeah. On the technology side though, for like your platform, are you using something that's provided, or are you building your own technology to, lease these units and to manage the units? And
yeah, right now, Mark, we're doing off the shelf stuff, and then just putting our own little twist on it. But yeah, we're using those systems to market locally, to bring in customers for our facilities. And one of the cool things we've done there is shift our focus to not just the regular household type consumers, but we're shifting our advertising attention to like contractors and professional kind of self-storage users. And the reason we did that was because, with the big shift in the residential real estate market over the past year, right, those transactions went way, way down as well because of interest rates going up. And so residential transactions and people moving is a huge driver of demand for self-storage. And so we were kind of caught in that downdraft where we had occupancy up or occupancy go down, and we had rates going down, trying to keep folks in place. But one of our facilities happens to have a lot of contractors, a lot of professionals. And so that facility was doing great. So, light bulb goes off. We're like, hey, we should really be trying to find more of these professionals, like, the pharmaceutical rep, or, the small business that just needs storage for a little while, or, contractors that need to store their materials or equipment or what have you. So we're doing a lot more of a marketing in that direction to try to diversify our revenue streams.
Yeah, I think a lot of people are going to be doing home additions versus selling and buying. So going after the contractors makes a lot of sense. What is the platform that you guys use to do that?
So we use something called Store Edge, which is we actually just kind of graduated to it. When we were first starting out, we used ESS, which is Easy Self Storage, which was great when our portfolio was smaller. But now that our portfolio is growing, Store Edge has a lot more capabilities, and there are some kind of bolt-on modules that we can plug in there to help us, like with our unit pricing, our specific unit pricing. They call it dynamic pricing, and like premium pricing kinds of things. So for example, like the units that are near the front gate are, someone's probably willing to pay more for that than the unit that's like way in the back of the facility. That's, maybe it's, you got to drive all the way back there. So that's one of the things that our new COO is bringing to the table is, really looking at pricing. He calls it like with a scalpel instead of with like a broad, facility wide approach at pricing. We're doing it very diligently and tactfully with a scalpel.
Yeah. And then do you have a bird dog in house, or do you rely on like brokers and other partners to bring deals, or how are you sourcing this volume to look at?
Yeah, all the above, man. It's like we're looking at a lot of deals, and they come from a lot of different sources. So we're certainly, on all the lists for the brokers, the Marcus Millichap and CBREs and all those big companies have self-storage groups. So we're on all those lists, but we also do have occasionally a wholesaler will come to us with a self-storage deal. So we look at those for sure. We belong to a nationwide mastermind group for self-storage guys. So we oftentimes will get deals from that group, then we'll partner up. But mostly, what we're trying to do, of course, is find off-market deals where we're going directly to the seller, directly to that mom and pop, and selling them a vision of what their life will look like, after owning this facility. So when you do that, it opens you up to maybe finding some seller finance opportunities and some more distressed turnaround kind of opportunities. So that's our number one preferred way of getting deals. And so we have a whole team starting with offshore virtual assistants that are smiling and dialing. And then we have onshore part-time people that help with that. And then as the deals kind of percolate up, they get into our in-house director of acquisitions, and then to my partner, Joe, who's ultimately responsible for our acquisitions.
Yeah. Do you have good results with the offshore people?
We do, and what we've learned there is as long as we give them like very specific instructions, they're capable of learning and adapting and changing. But so we'll try a certain approach, a certain call script for a while, and if we can, we track the data, right? If the conversions aren't where we think they should be, then we'll take a look at revamping the script or revamping the approach altogether. So that seems to help a lot, and they're certainly very economical resources to use. So that's a huge plus.
And the list for them to dial, is that like a listsource.com list, or how are you getting your lists put together for these guys to dial?
Yeah, what's funny is we used some of those list brokers out there, and what we discovered, and I wish we had discovered this a lot sooner, but we discovered it nonetheless. Their lists are like pretty spotty. And so what we discovered is that the self-storage specific databases like StoreTrack or Tract IQ, some of these databases that are specific to self-storage, they have much more comprehensive and complete lists of the self-storage facilities. So we've started using those, and we're getting better results. But what's interesting is the way we discovered that. And this is a great tip for anybody out there that's trying to scare up some deals. My partner Joe went on basically a road trip through North Carolina, which is one of our favorite markets for self-storage. And he set up some appointments with some owners. But what he discovered was when he was driving from facility A to facility B, he's driving past these facilities and he's like, that one's not on my list. That one's not on my list. So he came back. He's like, I don't know what's going on, but I'm driving by all these facilities that are not on our list. And so that's how we discovered that problem. But I think the big takeaway for people is, get your boots on the ground and go visit with these owners, because that has created huge dividends for us. Joe's he's good in front of people. And so when he gets in front of that mom or pop owner, he's able to actually get a conversation going. And a lot of these moms and pops are, more traditional business minded, handshake kind of people. And so they like to see, face to face. So we've actually gotten a few deals from Joe's road trips. So yeah.
So Tom, on the same subject of the acquisition side of things, have you ever explored the idea of exploring the UPREIT transaction model for acquiring some of these storage facilities and in exchanging shares in your own REIT in exchange for the title to these properties as a way to help people defer their taxes on these transactions? Just curious about that, or if you've ever even UPREIT is kind of like a obscure thing too. So.
Yeah, it's a great question. And the short answer is no. We've talked to sellers about creative ways to take over their facility, but that's not one that we've put into place at this point.
Okay. Yeah, the advantage of it is they can exchange their equity into basically and diversify their ownership and defer their taxes across your portfolio, and that kind of is almost like a zero, it's not a $0 transaction, because obviously there's always costs, variable costs associated with any transaction. And then they can basically sell units of those shares in there. So it was just something that I've seen out there. There's a company called Broadstone. It's like a private real estate investment trust out of Rochester, New York, that does that very same approach with people that they don't want to manage it anymore. They'd like to collect, pure passive income, and also be, diversified, and then also have a little bit of more liquidity in place too.
Gotcha. Yeah, that sounds pretty cool. And being a former corporate finance guy, I love that creative financial stuff. But that sounds interesting. We did have one of our investors. He's been with us a long time. He's like a 9-figure guy. It's worth over $100 million, and he's always coming to us with interesting ideas. His idea, which is similar to that, is to do a SPAC. And I can't even remember what SPAC means right now, but basically it's a way to take
special purpose acquisition company.
There you go. It's a way to basically a backdoor way to take your company public, and then you have shares you can use as currency to acquire facilities. So we look at stuff like that, but actually putting it into practice is a little challenging. But I love the Broadstone idea. I'll have to look them up.
Yeah. No, absolutely. Guys, the one thing that I was my company's not big enough for to do something like that. So we I think that in acquiring properties from people, when you're talking directly to the owner is kind of like we engage in a discovery process, right? Like, what do they really want? And what are the motivational factors and drivers behind their decision to sell? And what is the best case scenario for them? And so a lot of times it's not just a conversation about the highest and best price, but also what type of structures can we do that might be able to defer taxes and that sort of thing. And of course, seller financing comes up and is a great way to defer your capital gains and then get income in the process. So have you been using, especially in this, those 3 deals you acquired last year, I believe, did you use any seller financing in those deals you acquired last year?
Yeah, we have. That's worked out really well. That's definitely a win-win kind of scenario, where we are able to, circumvent the unpredictable and crazy banking world and create a win-win with a seller. Because to your point, these guys can face a pretty big tax bill if they're not careful. So one seller that we bought from, we bought the facility for $6.5 million. He put up $4 million at 5% fixed interest only for 5 years, and he's in his early 80s.
Wow.
And what he's hoping is that he kicks the bucket in the next 5 years, and then so that his children can get a step up in the basis on the assets that he's going to leave to them, including this seller finance note. So anyway, there's it's always fun and interesting doing deals out there for sure.
It's a little morbid to think like that, though.
I mean, I'll have to use that. I mean, next time, because that's the one conversation I get is like a stopping point with a lot of these people when I have a huge capital gains exposure. Like, these guys are like maybe in their 80s to mid 80s. And I don't want to sell because I have huge capital gains, depreciation, recapture exposure. I mean, I basically have zero basis in this thing. And then, and so I'm going to wait till I die so my kids will get the property and then step it up. But then, like, in the meantime, over the next like 5 years or whenever that happens, when whatever, across the Rainbow Bridge, for instance, your kids are going to get you may have problems running that property, and then your kids are going to get a property that they don't want, maybe in a worse condition than they are right now. So I'm going to use that in the future. I was like, hey, you can kind of like defer this, get the property off your hands. So you can just like basically take that out of your mental real estate, this asset. And then, in the event that, you kick the bucket, then, your kids get to win.
That's right. Yeah, of course. Yeah. That'd be good advice.
What is that process like when you're working with the 80-year-old and you got to get them to know, like, and trust you enough to be able to go down that road, thinking that, you're the right solution, you're going to run it the way that it needs to be run, you're going to increase the value. What is that, an easy process? Maybe just walk us through that a little bit.
Yeah, great question. It it all boils down to, like you said, know, like, and trust, and just building that rapport. I would say too, like, working at their speed, not trying to, kind of force things along. Cause like that particular guy, like he would like disappear. This facility was in upstate New York, but he would disappear to Florida for a couple weeks and, not really, answer calls or emails or whatever. So, we had to kind of work at his pace, which was fine. But I think if we went in there like guns a-blazing and tried to, pressure him into selling, or, hey, if we tried any kind of, sales techniques or whatever, like, I think it probably would have backfired on us. Because again, I think a lot of the moms and pops that we run across, they're very traditional in their way of doing business. They're handshake people. A lot of times, they're not super sophisticated, so they might need a little extra nurturing, a little extra education, a little extra hand holding. But at the end of the day, you can get some great transactions that way for sure.
So you're getting the lead, and then you're scheduling an appointment. So you're sending somebody for a face-to-face sit down with them. Are you then, if everything's going well, they know, like, and trust you, are you then saying, hey, we need to get you an attorney, so, it's not just one-sided, and that's kind of how it goes?
Yeah, that's another aspect does get a little dicey is the attorney kind of thing, because a lot of these folks are like, yeah, I've done real estate transactions before, I don't need an attorney, blah blah blah. We actually advise them, nicely. We're like, hey, you should get an attorney. You really should, because what our experience has been is, we have a fantastic attorney. Jason Mandel from Armstrong Teasdale out of Philadelphia is like, again, he's one of these guys, sort of like Don Herzog, the life storage guy that came to join us. Like, I'm like, how did we get this guy to work with us? Because he's usually working on like transactions that are like tens, hundreds of millions of dollars in real estate and stuff. But you never know who you play tennis with. I used to play tennis with him, and we played tennis together for probably 2-3 years before I even asked him, like, hey, what do you do for a living? So anyway, next thing you know, we get a real estate attorney. But anyway, so Jason, like, it makes him really uncomfortable when there's not a qualified attorney on the other side.
Yeah.
So we definitely push for that gently, but like, hey, it's going to be in your best interest to make sure you're dotting the I's and crossing T's the right way. And we've also had sellers come to us with like like a personal injury attorney or something like that. We're like, no, I know it's a friend of the family or whatever, but that's a different animal altogether. So but again, some people are maybe a little less sophisticated. They think, oh, an attorney's an attorney, but that's not really the case.
And then you just have your attorney draft all the docs, send it to their attorney for review, and that's pretty much it.
That's right. Yeah. One facility we bought outside Baltimore, Maryland, we went down and visited with the mom and pop seller. It wasn't a seller finance situation, but they were definitely, mom and pop. And we were talking about the purchase agreement, and the woman like basically picks it up off her desk. We're like touring the facility. She like goes over to a railroad tie, and she's like signing the contract like on a railroad tie. Like, are you sure you read through that? Enough. But anyway, like I said, it's funny the people you meet out there.
Yeah. So I'm curious, Tom. I mean, your message is helping miserable landlords invest passively in real estate and regain their freedom is your tagline on your LinkedIn profile. It doesn't mention anything about self-storage. So, I mean, are you a lifer for self-storage for an asset class, or has your team talked internally about potentially going to other asset classes in the future?
Yeah, great question. We're all in on self-storage, but the world could shift, and we'd have to adapt if we wanted to survive with it. But I think the ultimate kind of purpose, at least for me, is like I said at the beginning, I've been around for a while now. I'm going on 30 years in finance and investing in real estate. So at this point, I'm kind of taking the Andrew Carnegie view of life. Like his goal was to make as much money as he could the first half of his life, and then give it away the second half of his life, right? So that's why we have all these libraries and stuff. So I didn't amass the fortune like Carnegie did, but I have amassed some knowledge, right? So I figure at this point in my career, I'd really like to be sharing what I've learned with people out there. And so if I meet an investor that's they know that stocks, bonds, and mutual funds aren't getting them where they're trying to get, that they should be looking at alternative assets, then I'd like to help them do that. And if they end up in storage, great. I mean, to me, the best way for a first timer, like if someone who's not done any real estate investing before, if they just do a loan, right? Make a loan to somebody on a rehab deal or something. And because you're secured in first position, you're making interest, your money's working for you. So I think that's like a good first step for an investor that's curious about the real estate world, but isn't ready to jump in whole hog. So I think, starting out with like lending, which I still do to this day. I do a lot of private lending, in and out of my self-directed IRA account. But yeah, I do think, self-storage has a ton of benefits out there for investors who are looking for cash flow, capital preservation, growth, and tax advantages. I think it's it's right up there. Multifamily, that's another thing I've been investing in for over 10 years as an LP, as a passive investor, has been participating in multifamily syndications. But, I think as long as people are diversifying into, storage, multifamily, maybe some lending, maybe do some short-term rentals, or, whatever it is, I feel like that's just a great, truly diversified portfolio of investments.
Yeah. What do you do on the capital raising side to get people to know, like, and trust you? What does your funnel look like? And any, advice you would give people that are out there searching for capital? What have you found success with?
Yeah, sure. Well, to be honest, I get a lot of people signing up from our on our investor portal after I've been on podcasts. So that's why, I've been on probably over 70 podcasts as a guest at this point. We're now, like, this year looking at launching our own podcast. But so I think it gives me the opportunity to share some of my stories and my successes and failures and lessons learned and that sort of thing. And I think people appreciate that level of transparency and experience. And so that's all we try to do, is just put our story out there, good, bad, and ugly, and just let people learn from our mistakes, and hopefully join alongside us, because we invest in every one of our self-storage deals. So I think that gives people a little level of comfort. But yeah, we're trying to educate them, nurture them, just let them know what we're seeing out there, let them know, the moves that we're making, and hopefully we can have them come alongside us. Yeah.
Just a follow up to that. Are you using a CRM, client relationship management software? Are you using some sort of CRM?
We are. We use ActiveCampaign for our email and our customer relationship management. Which also kind of overlaps with InvestNext. InvestNext is our investor platform, which also has some CRM capabilities. So we kind of use a little bit from each.
Very cool.
So Tom, how do you keep in touch with the people that are on your distribution list? Do you do it via email newsletter? Do you do it through some sort of like interval of like actual picking up the phone and contacting them, or using social media? Kind of like what's your platform for keeping like yourself top of mind, so when you're doing a raise for a deal that they're still familiar that you exist?
Yeah, that's a great question. It's all of the above. So we do have consistent email campaigns. We send out like what we call a value add email every week to our group. We try not to overwhelm them. But in those emails, we try to share something of value for our investors, different strategies they might want to look at, trends we're seeing in the industry, in the market, that sort of thing. But one thing we're doing a lot more of this year, because it's been a tough stretch here for raising capital with all the craziness going on in the world and the markets and whatnot. A confused mind says no, right? And a scared mind says no. So I think there's a lot of people, just unfortunately, because it's probably the worst thing you can do, they're sitting on cash and they're like, oh, I can get 5% at my bank these days
for 5 months.
Yeah, for 5 months, and then what? Then it's gonna go away or whatever. But people seem to that's easy, right? It's easy for them to just make that move. It's a lot harder for them to listen to our investor webinar that we're going to have this coming Monday for a deal we have, and then ask the right questions and read through the private placement memorandum. So there are all those hurdles that we have to get over to raise the capital. But ultimately, I think it's with my investor hat on, I mean, it's the small price to pay to have a truly diversified and predictable portfolio.
Yeah, for sure.
Yeah. So on that note, with like the value add, can you give me like a value add email? This is one thing that my wife and I have been like, verbally jousting for the past like year or so over like email marketing. She loves email marketing. I hate receiving email marketing. And finally, it took me like watching a YouTube video. There's this guy Sabri Subi, who's like a marketing expert, who sold me on the idea of email marketing, because it's like one of the only ones besides podcasting where you can get somebody's like undivided attention. Because usually when they're going through an email, they're like, they're not looking at anything else. They're looking through that email. Of course, there has to be some sort of interest or hook associated with it. So like, what type of content ideas, like, can you give us an example of one that you've sent out that has been on your newsletter that got a lot of great engagement or a higher open rate and that type of stuff?
Yeah. So, like I mentioned earlier, we were trying to, in a lot of cases, diversify our revenue stream into more contractor related storage than residential consumer related storage. So knowing strategically that we were making that shift, we did a series of emails about contractor storage and why and the benefits to participating in that market and diversifying our revenue stream into that market. And those emails, I mean, our open rates are generally pretty solid, and but those open rates were even better on that series of emails. And so we try to like see where the business is going, and then we kind of grease the skids ahead of time with our investor community, so that when the contractor storage deal does come out, like they've already kind of been educated about why we're doing that. So that's been a good way to do it. But I think the overall point is I think you need to have a pretty well diversified approach to marketing, because email marketing might work for you, but somebody else might, as a consumer, right? Somebody else might rather listen to a podcast, or somebody else might might be on Instagram, but they don't go on LinkedIn. So you kind of have to be in these different areas, and that's been one thing that has helped us a lot, is really dialing in our messaging, which is why you see in my, as you referred to earlier, my LinkedIn tag about helping miserable landlords, because that was me, right? I had a portfolio of residential rentals that just drove me nuts and never quite performed the way that they were supposed to, and which is now why we're in self-storage. So I think it's good to appeal to different people in different ways, using different language, but trying to dial in those stories to some particular groups seems to really help a lot.
Yeah, that theme carries across all marketing. I think the successful wholesalers are the guys that have like 10 different ways to send you a letter, right? You've got your yellow letter, you've got the one where you got to rip the top off, you got the urgent letter. They're like, yeah, I need all 10 of them, because like not everybody will open the different letters. On the side of when you're talking about getting these contractors to come in, have you considered giving them a space that has like power and maybe a bathroom where they can actually operate out of it? Because I'd imagine a lot of contractors want that. The ones that we deal with are typically looking for a space that has power and a bathroom, even though it is kind of quasi storage because they work a lot on site, but they want a place where they can come back, and if they need to like build a cabinet or whatever, it's a little more comfortable than a self-storage unit.
Yeah, we do in those particular units, we do have power, and we also have security cameras inside and out. So and that's actually another revenue stream. So they pay more for the internal security camera. But so there's a lot of different games we can play there to provide additional services, additional value. As far as bathrooms go, we do have a bathroom on site, but we don't have a bathroom in the unit, because logistically that would just be a challenge, and not we don't want tenants and toilets, right? That's why we're in storage.
Yep.
So in terms of like marketing to the contractor, we talked about like using the contractor storage as a story to tell your investment partners, your potential investment partners. How do you sort of contact that contractor community to bring visibility for this as a viable solution? Because a lot of contractors are like, I got to go into some, small bay industrial facility that may be more space than I really need, and that sort of thing. Like, is this involving strategies with like, a lot of contractors, they're not like, on sophisticated platforms. They may be on like Craigslist, or they might be on like Facebook Marketplace looking for spaces. Like, so like, are those like two channels in which like, okay, we can use like Facebook, Facebook Marketplace to like get in front of contractors? Like, tell us about that strategy. Cause like, that's like a whole, emerging type of thing.
Yeah, 100%, which is exactly why we hired a marketing manager this past year, because we knew we had to get a lot better about our marketing and especially our targeted marketing through like Facebook geo ads and those kinds of things.
Mm-hmm.
And I'm just, I'm a spreadsheet jockey by training. So, having to learn the intricacies and the whole, ecosystem of social media and whatnot was just not really up my alley. So it took a kind of a who, not how approach, and hired a marketing manager who has 10 years of experience in marketing. And, so she's all over, the social media and the email marketing and all that stuff. So she is now charged with not only helping us market to investors, but also helping us market on the customer acquisition side as well. So she's the one who's kind of dialing in those Facebook ads, finding the contractors in the area near the facility we're trying to fill up. And so we're starting to see some results from that. But she just joined us kind of middle of last year, so she's still kind of getting things ramped up, but we're really excited about that for sure.
Do you have her in charge of your active campaign as well? She kind of leads that whole thing, or somebody else taking care of the active campaign?
We do, yeah. So she's our it's not her title, but she is our chief marketing officer. She's in charge of all the marketing, and she has a couple of people under her that can help out with the specifics of the active campaign, actually pressing the buttons and getting we actually do use so Sam is her name. She has Tori. Tori is now using ChatGPT to help with our social media posts. So basically she'll feed in our long form email or blog that our copywriter writes, and then ChatGPT will, kind of shrink it down into a more usable social media sized, caption, so we're trying to leverage all those fancy resources.
Is your copywriter on payroll, or is that like a third party?
She's third party. Yeah.
And you get good results? The copywriter's not just going to ChatGPT first.
Yeah, who knows? She might be, but no, she's she's been with us, probably a year and a half now. And at first, she didn't do a great job kind of capturing our voice and our messaging as a company. But then just with a little bit of, trial and error, a little bit of coaching, a little bit of direction, she's got it nailed now. And so she's been a great resource for us. And so and it doesn't take a whole heck of a lot of time. She'll put out, we'll have a meeting at the beginning of the month. She's like, hey, these are the 4 emails that are going to go out, each of the next 4 weeks. These are the blog posts. The Tori takes those and skinnies those down to social media posts. And the other cool thing is, so like, we're talking about contractor storage. So I can go to Rachel, our copywriter. I can say, hey, we're kind of shifting in this direction. Can you do a little research and come back with like a series of emails or blogs on contractor storage, the benefits there? And so she's been really good at nailing that stuff for us. Okay.
Now the hard question. How are you, you've got all this payroll going out. You got contractors that are helping you. I'm sure it's a significant expense to do this marketing. How are you tracking your ROI on that marketing and knowing that you're getting a good bang for your buck?
Yeah, that's an internal question that, we've been grinding through ourselves, because obviously, that's big, right? We need to be able to measure what we're getting back in return. So it's a work in process, Mark, but but it is something that's top of mind for the leadership team here, just to make sure that we are getting return on that investment. And so what's interesting and really pretty exciting is, since we brought on Sam, the marketing manager, and we've definitely become more kind of data driven and more kind of KPI focused, key performance indicator focused. We are for sure looking at those numbers. I think we still have a little ways to go before we can really make a definitive call, but like I mentioned earlier, we can definitely see, like, for example, when I do a podcast, when the podcast drops, we definitely there seems to be a correlation there with upticks in our investor portal signups, which is cool. And so we're tracking, the cost for the Facebook ads and things like that. So we are definitely looking at that. But tell you what, if you have me back, 6 or 9 months from now, I'll have a much better answer. We'll have a little bit more of a track record there.
Have you read E-Myth, Michael Gerber's E-Myth?
Yes.
You read that one? Yeah. So that kind of got me switching my mentality, because I used to just throw money at marketing. I was horrible. I'd be like, more marketing means more business, right? But then after kind of reading that and sleeping on it a little bit, I'll just allocate like a certain percentage of the profit to go back into marketing, and just kind of, because it's so convoluted sometimes when you're doing so many different things. Like, what are you trying to track, especially when you're a small organization? If you want to get down into the minutia, it's like you've got marketing for contractors, you've got marketing for not tenants, but self-storage tenants. You've got marketing for investors. You've got marketing for your podcast. You've got marketing for all these different things. It's like, where do you draw the line?
So I will tell you, my last corporate job was with Nutrisystem. And Nutrisystem, of course, they have TV ads, right? They've got print ads. They're all over the internet, right? They've billboard, they do like everything. So part of my job was trying to find out, like, where were these customers actually coming from. And I think the answer was really that they might see an ad in the newspaper or their weekly flyer or whatever, and then see an ad online and then click to buy. So it's like they're getting hit from multiple angles. It's hard to put your finger on the exact one, right? So and Nutrisystem was spending millions and millions of dollars a month on marketing. So it was, it was a big question to try to decide, like, where to spend that next $1 million,
Yeah, no, it's something that I don't know. I'm kind of like on the Grant Cardone side of things with marketing. Is just like, just be omnipresent, and there's really not a very specific scientific way, at least to measure what I do. Like, I have ad spend on Facebook to promote events, for instance, and my educational platform. And oftentimes it's like that. It's like a confluence of people being touched through multiple different channels over a long period of time that builds that indoctrination factor and trust, so that so it kind of aids the sales process. So like when you're meeting with somebody for let's say meeting with somebody one-to-one for the first time ever, they like the relationship tension's way down. They feel like they already know you, like you're their best friend. So you can really communicate with each other directly about, okay, what problem do you have, and how can I solve that problem, or our company solve that problem. But I think probably the most frustrating thing though is the damn Facebook ads. I've trained myself so much on those, and I still haven't figured out the secret sauce. I thought I figured out the secret sauce probably. I was running a little bit experiment and beta testing on a webinar that I was promoting, and I got a ton of signups for it. Like 500 people signed up for this webinar. And then when it came down to the day of webinar, and I had like all these like email sequence and sending them out. When it came to the day of, I was like, damn, I got to upgrade my Zoom subscription because I'm going to have so many people here. Zoom subscription. I had six people show up. 6.
Yeah.
And I was like, oh, and then I was like, what, $2,000 just like set on fire. Cause I figured like if I could acquire one customer or one client out of it, then that's just something I could scale. So I could crank that $2,000 up to like 20,000.
Right.
So yeah, I think it's frustrating for everybody. And also there's a lot of companies that will tell you that they know everything, they cracked the code, and we'll feed you lines of BS.
Yep. They'll take your money. Yep.
So I know we got 5 minutes left. I guess off topic. What do you do for fun, Tom?
Yeah. So, you have to excuse my casual attire today. I'm actually down in Florida. I escaped the Great White North to come down and visit my mom for her birthday.
Nice.
So was out, had a great dinner last night with my mom and my sister, my cousin, and actually my son is in college down here as well. So we had a nice little family dinner last night, which was a lot of fun. But yeah, I'm helping her dog sit. My sister is at work, and so she drops the dogs off at my mom's house. So we're dog sitting 3 puppies. I call them puppies. They're not puppies, but you know what I mean. But yeah, when I'm not down here, my 2 big passions are golf and guitar. So
Nice.
Both I've played since I was a kid. So have a lot of fun with that.
I would like to get my son into golf and guitar. I never got into golf, and I feel like I'm handicapped because of it.
Yeah, I'm thankful I learned as a kid, because learning it as an adult, like I just wouldn't have the patience. It's a tough game. I mean, I've been playing, pretty much my whole life, and to this day, I'll still hit shots that someone swinging a golf club for the first time would do better. So it's like, just drives you a little nuts. But I love being outside and getting some exercise in, and if I could make a few good shots around, I'll be happy and hang out with my friends. So it's good. It's a good time.
It's very cool. Do you golf, Matt?
Hell no. I'll never golf, man. So I'm just not interested at all into it. So, but yeah, like my attorney is like, hey, do you want to go out golfing? I'm like, no. It's like, it could actually be really good for your business. And I'm like, dude, I can find other things to do that I'm more passionate about that would be good for my business, rather than just, forcing myself to do something just for that, because I won't have any passion. The ADD part of my personality just won't allow it. I need to be doing something that's like extremely strenuous. Or else I'm just like, I'd probably drink myself silly on a golf course and embarrass myself.
Yeah, it's so funny you say that, because I'm guilty of that as well, right? I mean, I think all entrepreneurs have a certain level of ADD. So I definitely, I can play, like 5 or 6 holes in a row, like really well, and then I just fall apart because I lose my concentration. But what's funny about what you just said is if I do find myself having to really if I'm, I don't know, in the woods or something, and I have to punch out through a small hole, have that kind of adversity, I tend to really execute on those shots the best, because it is something I have to actually pay attention to. It's not like this big open green fairway out in front of me. It's like I actually have to pay attention and hit the shot in the right place. And so it's funny. I find I do better on that than just, easy shots. So
yeah, I do Frisbee golf. Frisbee golf is not the same as regular golf, obviously, but I have the same thing. Like if it's wide open, I can huck it and it's good. But if I'm in the trees and I gotta weave a shot,
right.
That's the best.
Yeah, it's totally fun. Yeah.
Well, terrific. That's the top of the hour, gentlemen. Tom, where can people is the best place to get a hold of you?
Yeah, guys, this is great. Thank you so much for having me. I'm Tom Dunkel. I'm the Chief Investment Officer at Belrose Storage Group. You can find us at belrosestorategroup.com, or you can Google Belrose Storage Group and find all our Facebook and LinkedIn posts and a bunch of my podcast interviews and other cool stuff that we post, just trying to educate and nurture our investor community out there. So I look forward to hearing from you.
Excellent.
Awesome.
Thanks for coming on.
Yeah. Thanks everybody for listening, and we will see you next Thursday.